I think it's a bit of both. I mean, Aquarius we started working on in late 2013. The company had a few issues that it had to address, such as the convertible bonds. But clearly, we also recognized that the commodity cycle, in this case the PGM commodity cycle, was probably near the bottom, and there was a little bit of urgency from our point of view to get it done. So, but transactions, you can't just do them quickly. They take time, they take discipline, and we're quite analytical about how we approach them. I think you've got to look at Rustenburg differently to Aquarius. Rustenburg was for sale for probably the last 18 months as well. I think what we were able to do with Rustenburg, because the sellers also knew the market was probably getting close to a bottom, or if not at the bottom, we had to find a way of structuring a transaction that, in our case, we could protect the downside. But of course, if they're selling at the bottom, they'd either want a higher price or they want some of the upside. So we were able to structure an exposure that they also get the benefits of the upside. In terms of Aquarius, as I say, we'd been talking to them for a long time. I think certainly the dynamics of the market did put pressure on them, but also I think once we'd announced the Rustenburg transaction, it was a very logical decision to say that they could probably do better as part of a new group as well. Certainly we cannot do anything that undermines what I call our dividend thesis. That's something we've promised our shareholders. If we were to do something that did undermine the dividend, they would not approve the transaction, so it would be stillborn. So yes, every investment decision we make, whether it's an acquisition or whether it's a capital investment, is underpinned by just checking it in terms of our dividend thesis. As long as we create superior value, which in our terms translates to a higher cash flow per share for our shareholders, I believe we can do this in any commodity, which means we need to understand the commodity cycles and so on. But yes, I think it does mean that you will see us perhaps growing in other commodities, as long as there's an appropriate entry point and an appropriate price. But there's nothing to stop us doing further work in gold and platinum. The fundamental issue is energy has become our second biggest cost in our gold business, and I have no doubt that platinum will make it even bigger. Having said that, there's two issues we need to be able to give our shareholders comfort on. The one is, how do we control our second biggest cost, being energy? And secondly, at this point in time, we know that there's quite a bit of load shedding and disruption to supply, which affects the gold business as well. So that's how we approach the energy side. Of course, there's some shorter term solutions, such as solar power. It's cost effective, but it only provides power in the day and really only peaks at a certain time of the day. In terms of coal, when you look at IPP projects, as you've correctly said, the fundamental cost of generating energy from an IPP project is the cost of the coal that goes into the power station. So very quickly you get to a point where you understand you've got to control that. The best way of doing that is owning it yourself. Again, if you don't manage the capital associated with buying a coal company, building a power station, you also undermine your dividend thesis. In our case, we do not see ourselves using Sibanye capital to build a power station. There are organizations that do it. What we would provide is the offtake agreement. So it's sort of financed off balance sheet. I've worked internationally, so to some extent the grass always looks greener on the other side of the fence, when in fact it's just as green here in South Africa. There are challenges in South Africa, but we understand the environment. I think from a competitive point of view, we don't see competition. That's a good competitive position from our point of view. We think that we can deal with the regulatory uncertainty, which is a big negative. We also feel that we can deal with the industrial relations climate, and we seem to have been quite effective with that. So we're happy to operate in South Africa. The CARE initiative is actually fundamental. If we don't have the support of our employees, we cannot deliver on our superior value creation. And I mean, if you take it to its logical extent, we will not generate the sort of revenues that are needed to invest in communities, return cash back to our shareholders, provide housing, deal with debt issues, uplift accommodation, and so on. So it's actually fundamental